welcome to this tutorial brought to you today by To The Tick, and today's topic, the bullish expanding triangle. Now, expanding triangles are found in two market conditions, reversal patterns, and also as trend continuation, either bullish or bearish trend continuation patterns. Today, let's focus on learning to recognize them, and let's set up trades in a bullish continuation pattern setup today. Now, the first thing I want to do is get an image so that we learn how to recognize it and understand that we're talking about a price pattern. We're looking for an image that represents that activity, and it is a two-part process. First of all, we have a pole, which you notice the base, and then the nice, strong, long, high pole with the tip up at the top. Facing upwards means we're trading in a bullish environment. The trend direction is established by the pole, part one. Part two is the triangle, which would be considered totally neutral without the attachment to the pole. To be looking for a trend continuation pattern, you need to have the pole and you need to have the triangle. The pole is what establishes that trend. Typically, all of our patterns that are dealing with trend continuation have the apexes of our triangles or rectangles or flags, all of them coming to the right side, or what they call the hard right edge of our picture. In this case, this one's flipped. This is the mirror image and it's flipped, and it may be a great big pattern like the one that's first represented here, and it may be something smaller, especially in a trend continuation pattern. It may be smaller, but basically you notice the shape. The apex side of the triangle is what's actually attaching to the pole. Now, for me, I'd like to give it a name. I've never heard anybody call it this name, but for me, it looks like a tomahawk. To me, this is a tomahawk pattern, and that's exactly what this image is over here on the left. And that's what I see in this price action. So now we don't get to trade little beautiful images like this when we're trying to trade for real money, and we need to establish a reference point and watch it unfold bar by bar. And first, let's note that the bears have been able to establish a wall of resistance here. The bulls have been building on this base, and the first thing we need to see them do is break through that base of resistance and high charge, and if they get that breakout, do they hold it? And if they do, let's create our pole. As traders, we get to wait to look for a continuation trade for something that we get to enter after that pole creation. So let's understand that the base, and it's pointing straight up, and we want to see volume coming in with price and establishing a good strong move. That thrusting impulsive move out of the market creates our pole. Now we get up here and we create a high, we get a pullback, and yet we get a smidgen higher high and a smidgen lower low. We really don't have enough details yet here without a little bit more activity for us to decide if we're through yet. So basically we get another push higher, and then this time the push comes back and it takes out a couple of bars lows, and now we've established some pattern. We can look at a swing high of the pattern and a swing low of the pattern, and we can establish an immediate definition of support and resistance. Again, our immediate definition of resistance is the orange, and the bright blue is our support line. And notice that they are expanding away from each other. Our apex is actually back here on the pole. And are they looking now exactly like what our little image is? Let's bring it back over here. Again, there's our nice pole. And notice here that our purple pole here is tilted towards price. Always will be, because that's the way price action runs. But it's representative of that action, and we get rid of the pole and we say, let's slide it over here and say, whoa, Lav, first of all, can I see the tomahawk? Yes, I can see the tomahawk. Looks just like a tomahawk. Now I'm going to say, Lav, our support and resistance lines don't look like our blue image. It's okay. The structure's the same, right? We're making lower lows with these swings, and we're making higher highs per swing. And we've started the entire thing with the apex attached back on the pole. So that gives us our line in the sand. I use the term the muddy trench for the apex, and that apex getting established early in this process shows you exactly where we're getting the battleground, bull bear, bull bear, bull bear. So now you have your first triangle measurement of the swing high they've given you in this breakout pattern, and you have your first swing low. That measurement in and of itself now can be used as a tool to help you decide what we might be getting as targets going forward. Secondly, we have our pole measurement. And as a continuation pattern, we know that we want to see this as a leg one. We want to see the base of our pole tip, and even though we're not really sure where that tip is, where is that swing high price, the bottom line is we've got that battleground that they are willing to support. We want to see triangles make about a 50 to 75% of this formation while we're in what we consider our consolidation phase. We want to see volume slowing down, and yet we want to see some activity every time we hit either the resistance area or the support area. We want to see a reaction in volume. And that's what we're paying attention to here. So whether we're really greedy here in our pole measurement and go all the way to the first real swing high, or we go right to that apex, we want to add it to the apex to go for the next target higher. We think it's leg 2 is still to come, and that's what we're looking for as our continuation trade. In the meantime, this triangle may last, it may be quick, and again, depending on your chart, 2 swings may be 2 months in your chart. 2 swings on each side may be 2 days, it may be 2 minutes. The point is the pattern is what you're looking for. Does it maintain that structure? And as aggressive traders, we can trade inside this pattern until somebody wins the argument. And I'm telling you, the argument of who wins the muddy trench tug of war, it will be on that apex. So as we move forward and we add some bars, can I take this low trade to buy? This was a swing too low. Can I take that? Right? A lower low is a lower right hand W. Look at it in a little bitty pattern. Can I try that measurement? And then when it gets through that midline on that apex, can I move my stop up aggressively and say, well, I'm looking for that orange line target, but whoa, it didn't get there. Can I still make money? Is there room for the trade from the spread that you had to work the apex? If there's no room, then you patiently wait for more swings, even if you're the bull. Now this is a third hit on the low, and they could not make it completely to the top. This ended up being a failed effort to give us a double top, couldn't quite get there. How do you read that? Well, inside that message, it tells me that the bulls ran out of gas, and again, the midline was the argument. We got a pull down and then a pull back, and that bar closed down, and at some point you had a chance, right? And again, if you wanted to go short in the pattern, if you're watching the volume right there with the red dots, you might have a nice short pattern there, even though you're looking at a bullish continuation process. Right? We haven't gotten to the continuation yet. We're still in the process. So one of the reasons why I really like the triangle is because of this versatility. It offers you wider perspective while you're waiting for that development. Okay, so now we get a new swing low. That requires an update to our measurements. So we've extended our lines, and now we have a swing lower low, and yet we're still using our targets, aren't we? We have the upper one here with the red dot, and now the gray dot is adding our upper resistance line into the picture, and we don't know exactly where that breakout might be yet because obviously it hasn't happened. But again, targeting. We can target this energy. We can target that if we get the swing high, swing low measurement, which is the typical way we measure a triangle, then we add it to a breakout number and we look for that same measurement to again be repeated. So now we have a pole continuation trade. We have a swing high, swing low triangle trade. We have a couple of smaller ideas as this triangle develops, and we're fully aware that this is now hit number 3. As a continuation pattern, we want them to get in here and get on with it. So what we're looking for, and we're watching while this lower line is still not taking back that much of the pole, the bulls are still totally in control. And what we're looking for is when the bulls finally step on the gas and get us back up through here. At the very least, we're going to target the midline effort again. Prove something to us. At least make an effort back to the midline. So is there room? Is there room for your trade? And on each one of these, you may get offered an extra trade or two. And again, measurements up to each trader. So let's go for and see what happens, and we make that effort back to that midline. And again, now the question is, can they hold the midline? They managed to get to it and get through it. Now can they hold it? So there's the contest. We managed to not only hold it, but we do get the little pull back we were looking for, and we push through. We've taken out these previous highs, and that was our real resistance, was those lower levels of highs. Now we've pushed through it, and oh my goodness, we got the full ball of wax. So again, we're asking ourselves, well, are they going to go on and hold that number way up there, or might they come back to here? Will they come back to here? Will they come back to here? Or will they even come back to the midline? We don't know, right? We're still watching and monitoring the volume at this point. If the bulls remain totally in control, we're going to see a bigger push. And again, our continuation pattern is coming from the backside support line. Whether it's the first one that you start watching, the second one, anywhere along this path, and or use your apex. If you didn't like this entry and this happened too quickly, use this one. Again, the apex offers you that if the momentum is still coming, hang on to your trade, adjust your stop. And that's what you're looking for if you want to trade a bullish continuation pattern looking for the highest odds. The best triangles should have a breakout in their formation 50 to 75% through the way of the triangle. The odds are tremendous that it will go with your continuation. Okay? So in conclusion, let's go through this very quickly. The bullish pole is the most important thing for you to really recognize. That thrust and volume and price that establishes that pole really sets up what you've got left in a continuation pattern. The Tomahawk triangle, higher highs and lower lows so that it's expanding that apex on your support and resistance line. That muddy trench, work that inside numbers if you have room for your trades. You can work that muddy trench, but be on one side or the other until you've got clear established lines. We also want to see a new push in volume and price once the bulls take control of that breakout line and or that apex. We want to see the bulls remaining in control. Otherwise, we keep working that adjusted stop. Our measurements, we can add to the breakout, to the apex. We use our pole measurement. We use our triangle measurements inside, and then we also use the bigger picture triangle once we get a full 3 hits on both sides, and we're looking for that extension. So this has been a tutorial today on the bullish expanding triangle, brought to you by To The Tick. Come over to our website. I have all of the text for this pattern, as well as chart examples, and of course the video, which always will have my nuances in it. And come subscribe, come join us. Thank you, and I'll see you again soon.